Welcome back to the channel. In this video, I'm going to explain exactly what's happening right now, February 2026, here in the local real estate market in Brantford, Ontario. Hey, my name's Thibodeau. I'm a real estate broker right here in my hometown of Brantford, Ontario. And every week I make detailed videos here on YouTube to try to explain the real estate market for you. Whether you're a homeowner, you're thinking about getting into the market, or this year's the year you need to make a transaction. The most important thing to understand about this year is that the averages and the headlines are going to mean nothing to you. What do I mean by that? Well, what we have happening is very different segments of the market are performing very differently. And when you clump them all together and just report an average or a headline, it washes out all the detail. And that detail matters to you if you're planning a move this year. So in this video, I'm specifically going to bring you up to speed on what just happened in the first 30 days of the year, which segment of the markets are running strong and still favoring the sellers, and which segments of the market are completely ice cold and it's a real opportunity for buyers. My main goal with this video is to give you the information you need so you can start the decision-making process. But of course, if you need a one-on-one analysis of what's going on in your situation, all my contact information is right below, and I'd love to hear from you. The main thing you need to know about this market is that it is neither good nor bad. It's a very segmented market, and how it feels to you is going to be very dependent on what type of situation you're in. And we're going to break that all down in this video. Let's take a look at the market snapshot for exactly where we are right now in real time. January only had 59 homes change hands, which makes it the slowest January in modern history. Not only was it slower than most recent Januaries, it was also slower than the most recent Decembers, which are usually the lowest month of the year. Now, it's important to note that it was really slow to start the month, but here at the end of January, sales did start to pick up. So we're hoping that momentum carries through and the buyers start to wake up here in February. Historical trends tell us that the peak demand for this year will be sometime between April and June. Well, last year, the main demand came in May, and it really only ran for a 6-week period. When we look at the pricing of homes here in Brantford, in January, the median sale price bumped back up to $600,000. Now, it's been bouncing around this level since about this time last year. And watching the chart month to month can be pretty noisy. And that's just because in statistics, we need a large sample size to create an average. And when we're only selling 60 to 100 homes a month, it's not quite enough homes to create a stable average. So try and ignore the month-to-month bouncing around and blur your eyes a little bit and look at the bigger trend. The annual pricing chart here actually shows a little bit of stability on the far side of the chart. And while there's a lot of talk about homeowners being underwater and people buying at peak prices, as you can see on this chart, if you buy your home prior to 2021, you're still sitting on a significant amount of equity here in Brantford. But there is this window during the pandemic run-up and then the market reversal where people are in a tight position. Now, again, this comes down to everyone's individual situation. I was actually just able to help some home sellers who bought their home on the way up in 2021, and we were still able to get it sold just a few months ago for a price higher than what they bought it for. So again, these charts show us the averages, but when it comes down to your situation, it's very important to dig in and find out what's going on for you. The inventory level is the number one indicator I'm keeping an eye on right now. In January, the median inventory level was at 299 homes on the market. This is actually slightly down from December, which is an anomaly. Normally, the inventory starts to ramp up after people take their home off for the Christmas break. So we got to ask ourselves what's going on here. There's a combination of factors at play here. One of them being our deep freeze winter cold. It's been double-digit negative temperatures overnight, and we've had consistent snowstorms and those snowbanks piling up on our front yards. This always slows down the early part of the market. But also there's the factor of a lot of people waiting out this last part of the market to see, will 2026 be a year that I can make my move plan happen? And when people are doing that, they're usually going to delay those decisions for a few more months. So we really have to watch the inventory levels over the next couple months and see what happens to predict the spring market. One thing I did notice as I dug into the inventory levels is that over half of the homes that were listed in January were actually not new listings at all. They were just leftover old listings from last year that had been taken off the market. So when we compare that there were only really 79 brand new listings combined with 59 sales, the market looks like it's actually pretty balanced, even though demand was really low. Now, if we want to really know what's going on in the market, we have to dig into the last 30 days of sales and see exactly what are buyers offering on and what are sellers accepting in terms of offers. The first interesting thing that I saw is 75% of the homes that did sell were actually older listings with high days on market. This tells me that the buyers were out there hunting for deals, and additionally, those sellers had been adjusting their prices and more willing to negotiate. Only 25% of the homes that sold were homes that had been newly listed this year. And it'll be interesting to see if this trend continues. The next most interesting thing is where the sales are happening. And the majority of the sales are happening between $500,000 and $700,000 here in Brantford. Under $500,000, it's just getting more and more scarce to be able to find anything that isn't a major rental project or a complete gut job. On the other side of the market, the conditions are totally different. Over $800,000, it seems like the market is starting to slowly freeze out, with not a single sale posted over $900,000 yet this year. Single-family detached homes are dominating the sale board, almost completely. This makes total sense. Brantford is mostly a single-family home detached community, and that's why people move here. They typically are coming to Brantford because it's more affordable, and they want a full house with a yard and a second level in the basement for a rec room or a home theater. These are the features that attract people to Brantford. So we're finding that it's being harder and harder to sell the townhome product because you can get a detached home now for some of the pricing of the townhomes. And also the condo market really ramped up during the market boom, but as things have calmed down, people still definitely prefer single family homes here in Brantford. Now let's dig into very specific market segments, and hopefully you can identify which one of these you're in so you can get some insight into how the market's going to feel for you. Let's dig into the detached single-family home market. This is the largest segment of homes here in Brantford. Looking at it by price range, let's start at the low end and realize that there are very few sales happening under $400,000. And this isn't because buyers would gladly buy up cheap homes. It's because these properties are very rare to even exist. Most homes that are under $400,000 are either in very undesirable areas of town or they need a significant amount of renovation. So they're not that attractive to the main part of the buyer pool. When we look up, the next whole chunk of basically $400,000 to $800,000 in the detached home market is moving still quite well. This is where we see the highest level of buyer demand, the most number of properties selling, and the strongest offers. Now, as we tip up just a little bit more expensive from $800,000 to $900,000, this is where you can really see the tipping point in our market. Quality homes in established neighborhoods are still being able to sell at these price points, where larger, newer homes in slightly less desirable areas of town or areas where there's a lot of inventory for sale are having a hard time at this price point. There wasn't a single sale over $900,000 in January, although we've seen one posted so far as I'm making this video here in February. When we move up above into the luxury side of the market, there is quite a bit of inventory and choice out there, and slowly one at a time they are selling. We find the high-end luxury market is a little less sensitive to the overall ebbs and flows of the general market because these properties appeal to very unique buyers who are less sensitive to day-to-day price changes. Something interesting I noticed in the data this month is that in January, split-level homes, both side splits and back splits, which are common styles of home here in Brantford, were actually the most popular and most in demand. I think these style of homes offer the flexibility of larger two-story homes, but also feel like a bungalow and are a little more desirable. Next, we have homes that are bungalows. Those are single-family homes or raised bungalows where the basement is pulled a little bit out of the ground. Those are our next most popular style of home, and that makes sense because they have different groups of buyers that are all interested in them at the same time. At the far other end of the spectrum, two-story homes have really slowed down. There's currently 78 two-story homes on the market and only 10 sales in the last 30 days. And this makes sense. Larger square footage, more expensive homes with more features is where the demand has slowed down the most. Now, looking at the townhome market, it's surprising that it's actually very slow. And you'd think the townhomes would still be an affordable entry-level product. But the challenge I'm seeing is that the townhome pricing and the detached home pricing are fairly similar right now. So most people, if they had the choice, would prefer a single-family detached home rather than a townhome that may or may not have condo fees. On the lower end of the price spectrum for townhomes, you're usually finding yourself in older developments in less desirable areas of town and potentially having condominium fees along with it. So that's keeping the affordable townhomes slow. The newer townhomes that were built during the exciting phase of the real estate boom all relied on people wanting to be able to afford something that they couldn't afford before. But now if you're looking at $600,000 or $700,000 for a townhome, and then you look over in the detached home market, you can find that product also. I think this is the main thing keeping the townhome market slow right now. If you are selling a townhome without condo fees, I think you have a big advantage because the condo fees, even if they're small, They cut right into your buyer's affordability. Now, speaking of condos, the mid to high-rise condo market here in Brantford is extremely slow also. It's been struggling a lot in the last couple of years. Some of the newer buildings were built with a very investor-focused approach, where investors would buy and own these units and use them as rental product. Whereas some of the older buildings in town are much more geared towards owner-occupied. Even some of them prevent renting. It makes sense that these older, more established owner-occupied buildings are still performing better because they appeal to that owner-occupied retiree downsized type of buyer. And they're a lot less sensitive to the overall economic conditions. They probably have all the equity already up in their home. The investor or first-time home buyer segment of the condo market is very slow. The investor dollars have just dried up, and these condo deals don't make sense for them now at today's interest rates. And for first-time home buyers, they're looking at these very small condo units with very high monthly condo fees. And again, it doesn't make sense when they could look at potentially a townhouse product or a single-family detached home. The last segment I'll touch on here is our multi-family properties here in Brantford. These are homes with 2, 3, 4, or even up to 6 units. Now, these are struggling just like the high-rise condos because the investor enthusiasm and investor dollars have slowed down because of the market downturn. There's currently 26 multi-unit properties available and only one sale in the last 30 days. This tells me that that fast-moving investor market is all but done for right now. And we're going to need some enthusiasm to come back or prices to come down significantly on these products before people get excited about buying them again. To summarize this up and make it easier to understand, what I like to think about is not if the market is good or bad, but that some people will have an easier time achieving their goals and some people are going to have a harder time achieving their goals in this market. So let's break it down like that. Right now, the market is going to feel a lot easier to you if you're selling a detached home under $800,000, especially if it's a single floor or a split level home. Right now, the market's going to feel easy for you if you're a buyer who has over $800,000 to spend. You're going to feel like you've got unlimited choice and negotiating power. And if you desire a condo or a townhome in this type of market, you're also going to feel like the market is very easy for you. There's a ton of choice out there and the sellers are going to be very negotiable. Now, let's flip that around. If you're going to be trying to sell a residential property over $800,000 this year, the market is going to feel a lot tougher for you. And that's going to feel even worse if you're looking at a large square footage, highly featured 2-story home. Also, trying to sell a townhome or a mid-rise condo this year is going to come with its own particular challenges. The main thing you're facing is there could be multiple other units just like yours in your complex or your building for sale. So it's going to be tough competition. Investors looking to offload multifamily product this year are going to have a real tough time. There's so much choice and investors are only scooping up things that seem like absolute deals. My best trick here is that if we can make your multifamily property appeal to an owner-occupier, either they're going to live in one unit and rent out the rest, or potentially use one unit commercially and rent out the rest of the property, this is going to be a better buyer and give us a better chance of selling it than just selling it to a pure investment buyer who's looking at it for their spreadsheet. Oh yeah, one more segment that's finding it hard right now is home buyers who have $500,000 or less to spend. This used to represent the entry point to the Brantford market. You could even get some single-family homes for under $500,000. But that has quickly dried up. And now we're finding that there's lots of people whose affordability tells them they can spend $500 and $550, but there's very little choice out there for quality properties at this price range. There is one group that I really want to dig into. If you're a buyer looking to spend between $600,000 and $800,000 here in Brantford, it's going to be a little bit of a weird market. At first, it's going to look like there's all this choice available, but what you're going to notice is most of the available choice are stale, old, leftover listings that have been trying to sell since last year or even earlier. And then there's this very small segment of the market of new, hot, fresh, well-priced listings. They hit the market and multiple people want them at the same time. So it can be this really confusing situation where overall the market feels slow until you find the home that you like, and then all of a sudden that one's in competition and you're not able to buy it. So really watch out for this situation and understand that in this specific segment of the market, we have a large portion of the market that is slow and calm. And then we have a small portion of the market that is actually high quality, multiple bid properties that are still selling over asking. Well, I hope you've been able to self-identify which one of these segments you're in or may be in this year in 2026 and really locked in how the market may feel for you. If things are looking easy, that's great. We got to go for it. Take your opportunity. If things are looking hard, My advice is to slow down and really plan out the process and make sure you've got a winning playbook. Of course, if you want any help with that, all my contact information is right in the video description below. Now, one of the most important things I get asked over and over again is what's going to happen next. Everyone wants me to be the future prediction engine. And while I don't have a crystal ball, what I have is data, patterns, trends, and history. So based on all that, let's take a look at what we expect for 2026. It's clear the way that January started and the way that last year ended that we should expect the first half of this year to have lower than average demand, maybe the lowest demand in recent history. We're starting this year off with the highest ever December-January inventory and the lowest ever December-January demand. So that's going to make the market feel slow and feel very tough for some people. Of course, spring always brings a little renewed energy, but my concern is by the time the spring energy gets here for buyer demand, we'll be at absolute peak inventory we've seen in the last 15 to 20 years. So that spring energy, just like last year, may be very short-lived. Most mortgage brokers and economists are predicting that rates will stay fairly flat throughout the year, but there are predictions out there that the back half of the year will see an increase of demand as the economic conditions in Canada start to stabilize and the outlook becomes more positive. Now, that's great if demand picks up in the back half of the year, but on the flip side of that, we will be at the highest inventory levels we've ever seen, at least in my career of the last 17 years. So those conditions basically cap any pricing growth because there's still going to be sellers competing. And when sellers are competing, whoever's willing to let their home go for a little bit cheaper is going to be the one that sells, and that temporarily stunts any price growth. Now, the weakest segments of the market that I went into earlier, they're going to feel the most pressure and they may still feel some price drops throughout the year. Well, that strong middle part of the market, I think, has a good chance of actually seeing a little appreciation as demand stays strong and there's very little choice for quality properties. The thing to really understand is that many people are waiting for a giant signal in the market to say, hey, that's it, we've turned around. And that's not really how it works. It more starts to redevelop in layers. And honestly, I'm seeing a few of those layers start to improve. Not enough to get excited that things are going to be amazing this year, but enough to say that I think we're near the end of this cycle and that I would predict that 2027 will definitely be an up year. And 2026 is going to be a deciding year whether we see a little bit more of a trough or this was actually the turnaround. And by the end of the year, things are a little better. The main thing that I've realized from my clients is that market timing is not always the most important thing. Usually their moves are surrounded by a major life decision or they want something more for themselves and their family. So making a residential move in a market that's confusing like it is right now in 2026, it rewards clarity more than ever. The exact same market conditions can be completely manageable and successful or be completely painful and frustrating depending on the playbook you run. If you're planning on making a move this year and you want to talk through your options and your situation without any pressure, that's what I'm here for. I'm 100% focused on helping my clients make clear, informed decisions and reach their goals no matter the market conditions in 2026 and beyond. Hope you enjoyed the video and we'll see you on the next one.